So crypto is actually getting a bit of a price bounce today.
Consumer expectations of inflation have rolled over. Market expectations of inflation have been anchored. I think this pushes the Fed to be more measured, and we heard some of that comment yesterday. And finally, I think it's good news that stocks aren't getting obliterated every time we have a bad CPI print.
I'm going to say a full 100 basis point rate hike from the Fed, now priced in for the July meeting, and then another 75 points for September. Markets now think the central bank is going to accelerate rate hikes and strike a restrictive monetary policy now within just 2 months.
The Fed has been pretty clear about this. They don't focus on CPI. They focus on something else instead called PCE, which is the Personal Consumption Expenditure Price Index.
Yes.
And I don't know what the flow through from CPI to PCEPI is exactly, but that is the broadest measure of goods and services, which does include food and energy. So it stands to reason that PCE may stay elevated for a while, which may give the Fed enough of the motivation they need to go 100, to go another 100, or maybe go 170, and then a 75.
The current state of the economy is a topic that is on the minds of many Americans. I mean, inflation surged an unexpectedly strong 9.1%, raising the risk of even steeper rate hikes from the Federal Reserve as Americans got pummeled by record gas prices, soaring rents, and stiff grocery bills. In today's video, we will discuss what's happening within the market after the June CPI reading. So stay tuned as Chamath Palihapitiya discusses what the future could hold when it comes to CPI, Fed interest rates, and a stable economy. Before heading into the video, be sure to subscribe for more videos on latest market updates.
I actually also kind of put myself on a limb there, and I said, I wouldn't be surprised if at some point we print a mid to high nines, maybe even a 10 handle at some point.
Yeah, we're getting there.
And the reason is because, rents are a little, they lag in how they're reported inside of CPI. So we have a couple more months to go of rents, and rents aren't moving or budging a bit. That's number one. We do see a little bit of fall off in energy prices, but I'm not so sure that it's enough, frankly, to move the needle. So I think that we could be in a sustained period for a while. The more interesting thing I thought today was that Canada surprised everybody and raised their benchmark interest rate by 100 basis points.
Okay.
So and they just came 1 full point, 100 bips, and they just said, we're going for it. We need to tame this. We need to break the back of inflation. And I think if you read the Fed minutes more carefully, I think Jerome Powell is basically ready to do the same thing.
Yep.
After this inflation print, the expectation for July went to 80 basis points from 75, which means a small percentage of people actually think it's going to be 100. And September, I think, moved to 75. So the question is that enough?
Chamath was not surprised at all with the hottest CPI report. He kind of expected this. While this may well be the hottest CPI report during the current cycle before a breather, there's no reason to believe the Fed will deviate from its immediate tightening plans or slam on the brakes. This means another 100 basis points hike at the July meeting is likely to happen. Just a few days ago, the Bank of Canada shocked financial markets with a surprise increase of 100 basis points in the official interest rate. So, is the Fed going to do the same next? Are we going to see 100 basis points in the Fed's July meeting? Will that be really enough? Let me know what you thought regarding this in the comments below, and let's get ahead with the video, as we will explore how the market reacted after the hottest CPI report.
I'm worried that we're in a sustained inflationary environment. I'm worried about that. I hope that we're not. But then the question, Jason, secondarily is then what do the markets do? And what's so interesting today is the markets shook it all off. I mean, you could not have had a worse inflation print. Everything was up.
Well, 10.
meaning it was beyond the number that was expected. Every component of it was up. Everything looked horrible. And people were like, meh.
The headline CPI for the month of June rose 9.1% from last year, up from the 8.6% pace recorded in May, and firmly ahead of the street consensus forecast of 8.8%. The June reading was the fastest since December of 1981. It's no secret that the stock market has been on a roller coaster ride over the past few weeks, and the market should have reacted very badly to this report, but it didn't really. And Chamath also found it very interesting that even after the worst inflation print, beyond the number that was expected, the market was still up. I mean, instead of going down in the red, the crypto market is all in green. Bitcoin continued to exude strength on Friday despite worse than expected inflation figures earlier in the week. This comes after Bitcoin's brief plunge to $19,200 last Wednesday. Before going ahead, don't forget to give this video a big thumbs up if you haven't yet. And stay tuned as we're going to explore what more Chamath has to say on CPI, Fed, and the economy.
We obsess over CPI right now because we're all kind of these fake macro wannabe traders, but I just want to remind you, because the Fed has been pretty clear about this, they don't focus on CPI. They focus on something else instead called PCE, which is the Personal Consumption Expenditure Price Index.
Yes.
And I don't know what the flow through from CPI to PCEPI is exactly, but that is the broadest measure of goods and services, which does include food and energy. So it stands to reason that PCE may stay elevated for a while, which may give the Fed enough of the motivation they need to go 100, to go another 100, or maybe go 170 and then a 75. I think that David's point is right. Like, all this taming that we've been expecting to see, we haven't seen it. And so every month it's like, oh, it's coming next month. Every month it's been, oh, it's happening next month. At some point, you may just have to say, maybe we're in like a sustained period for a while, and I have to believe it's going up before I believe it's going to stay stable or go down. If you look at the Taylor rate, again, and, people have a bend in the Taylor rate. It's not what it used to be, I guess, but, it's still pretty directionally accurate, which is, what is the true equilibrium interest rate that allows us to basically manage and meet supply and demand together so that we have a calm, stable economy? And that stable equilibrium rate is approaching 5%. Our target, the collective wisdom of the market believes that 3% is enough to get the job done. We're right now at 1.5 to 1.75. So if there's any number between 3 and 5 that is the true price, we have a lot of work to do to get there.
Each month, two flagship inflation gauges get a lot of attention: the Consumer Price Index and the Personal Consumption Expenditures Price Index. Chamath points out that when it comes to inflation measures, the Federal Reserve prefers the PCE more than the CPI. Chamath also believes that we are in a sustained period right now, and that inflation will go up for a while before heading on a downturn. He believes there are still many challenges that need to be addressed in order to maintain a stable and prosperous economy. According to him, somewhere between 3 and 5 will be enough for a stable equilibrium rate, and what needs to be done in order to ensure a healthy economy. To conclude my video today, inflation is really a complex issue, and the Federal Reserve is going to do whatever it takes to stop it. But the main question is, how will it cost ordinary people in the crypto market? How much high interest rates will have to go before a downturn? How long do we live through this stagflationary period? To stay up to date on the latest news, be sure to subscribe and like. I'll see you all in my next video. Adios.